So, Krishna, we're coming off of 4 down days for the S&P 500, and futures are looking up today, but we were here this time yesterday, and we lost all the gains. What is the latest thinking around trade?
Well, so it was a few down days, but the month has been actually quite spectacular. So let's not focus on the specifics that narrowly. At the end of the day, what this is about is policy support. And on a global basis, we continue to get positive policy support. Fed, ECB, every central bank in the world is on the verge of easing or easing already. Economic growth, in our opinion, in the second half of the year is probably going to improve meaningfully from the second quarter for sure. And as a result, I think the outlook is going to improve. And finally, trade. At the end of the day, the change in tone with respect to trade is absolutely critical. The fact that they are presenting demands as opposed to talking about doctrine and honor and stuff like that, I think indicates to me that they are willing to negotiate and find some sort of a conclusion. Not at the meeting,
you are relentlessly bullish on this stuff, aren't you? I mean, there are people who could point to that and say, Huawei, forget it, it's off the table, there's no way. That's a negative, not a positive.
Well, so I think Huawei was always a negotiating tool all along. I think there are some restrictions that are going to put on Huawei, but Huawei was imposed to put the pressure significantly on China. And I think
so. So if she says, all right, you got to lay hands off Huawei, you think we're going to go along with that?
I think in some form or the other. I think without that, you can't reach some sort of a settlement. And I think finding a settlement benefits Trump as much as it benefits Xi and the global economy, for sure.
A lot of people think the opposite. They believe that the president actually benefits from his opposition and actually will use it as a support mechanism for the election.
Well, I think if he goes down that path too hard, we'll end up with a recession in 2020, and I don't think that sort of helps his re-election outlook meaningfully.
Keith, what happens if the two leaders can't find any common ground and they walk away and it's sort of status quo, and then President Trump moves to implement more tariffs? Then what? What do we see in the market?
Yeah, that's going to be a downside risk. Our base case is that we're going to have some type of truce. There's incentive for both of them to do so. And if you think about it, going to the point that Krishna just brought up, if you look back like the last 50 years or so, the only two presidents who weren't reelected had a rising unemployment rate. So there's incentive to eventually have this done. And I think from a market perspective, just knowing that back at the table is a positive. It also keeps the Fed rate cut in play, which is a positive. And lastly, we're at near record highs, and we've seen the most equity fund outflows over the last 20 years, more than 2009, more than 2012, more than 2016 leading up to the election. So we still think that the path of least resistance over the next 12 months is higher, but you will have these bouts of volatility as these carousel of concerns continues.
Mike, I'm glad he brought up unemployment because we did get some data today, jobless claims. Don't want to make too much of it, but the trend is going in the wrong direction now for the first time in a while. 227,000 last week, 7,000 more than expected, 10,000 more than we saw last week. We're now at a 7-week high. Is this a sign that things are really worsening for the economy and for corporate America and for the employment picture, which was the brightest part of the economy?
Yeah, I mean, obviously coming off low levels, but now the unemployment claims chart starts to look like it made a bottom and is starting to rise, at least tentatively right now. And also the final revision of first quarter GDP, it was more or less as expected, maybe slightly light, but consumer spending piece of it was revised lower. So yes, I do think that it all contributes to this idea of a domestic soft patch. The thing is, I don't know how the market's going to interpret that, because the market wants clearance for the Fed to act in July. And so at this point, if it's not at worrisome levels, but it's going to keep the Fed in play, then maybe that's okay.
Well, it does feel like, Krishna, the market has ignored some of the worsening or deteriorating fundamentals in the economy.
Well, things were slowing down coming into 2019. And because of the inventory adjustment, things slowed down meaningfully in second quarter. But with financial conditions easing substantially, I think in the second half things look meaningfully better from our perspective. At the end of the day, if the Fed continues to talk softly, I think the economy overall will pick up. There's enough momentum in the economy. Employment level, even with the change in slight tone, is still very, very good. Income growth is good. Consumption probably remains stable. Where we have problem is capital expenditures, and that is going to remain a problem for the rest of the year as well.